I just put $5,000 into Microsoft stock, and most of Wall Street thinks I'm crazy. Why? Because Microsoft has been sliding down nearly 17% year to date. And while the crowd is panicking, the data tells a complete different story. We're looking at a 15% valuation discount compared to its peers, and today I'm going to be breaking down the insider thesis that explains why this isn't just a dip, it's a generational buying opportunity to the world's most powerful AI engine. Now, we're witnessing a massive disconnect between Microsoft's stock price and its fundamental reality. While the Mac 7 names are trading at a premium, Microsoft is sitting at a 15% valuation discount relative to its history and the broader sector. Now, the main reason for this is because the market is crippled by a specific fear, the 80 billion plus capital expenditure cycle for fiscal year 2026. Investors are worried about this massive AI build-out and how it will cannibalize their earnings. But as we are about to see, the data suggests the exact opposite is actually happening here on Microsoft. Now, if we look here at the reality, the fundamental, we see that the EPS accelerated 24% in Q2 and roughly two-thirds of the current 37.5 billion quarterly capex is allocated towards short-lived assets like GPUs and CPUs, which dynamically are deployed to instantly monetize the surging AI workloads. As well, we have to take into account Microsoft's Dual Engine, which is a productivity software and intelligent cloud. First of all, we have Microsoft Cloud recently surpassing $50 billion in a single quarter for the first time, and Azure is growing at a 39% year-over-year growth rate, with AI services alone contributing 12 to 13 percentage points of that growth. Now, as well, the company isn't just allocating money now, they are seeing potential earnings growth in the future, with Microsoft 365 now having 15 million paid seats and GitHub Copilot's around 4.7 million paid users. We also have to consider that Microsoft has a 27% stake in OpenAI, and this is a hidden asset valued between $135 billion and $200 billion. This alliance secures that the world's best frontier models are only exclusively in control of Microsoft, and it does allow for this creation of a captive customer for the Azure infrastructure. Now, we also do have to consider the efficiency paradox. There's been roughly around $37.5 billion in capex, a 66% increase, but the operating margins of the business have actually expanded to 47%. That means that the core business is so efficient that it is effectively subsidizing this entire AI transition. As well, if we look at the Microsoft overall $625 billion commercial backlog, this guarantees revenue durability regardless of the short-term macro volatility. We see that OpenAI dependency is still 45% of this total backlog, but even though we are seeing this immense growth, Microsoft is positioned to heavily benefit from this overall AI infrastructure. Now, if we assess the Rule of 40 and the overall free cash flow analysis, Microsoft has been seeing a roughly $71.6 billion annual cash flow. And if you look at the debt to equity ratio, it is maintaining a very, very low. That means that the majority of the leverage isn't being exposed to debt, which is a very good news here for investors. And if we simply look at the Altman Z score, which kind of places the companies on a scale of probability of bankruptcy, Microsoft is well above the threshold of 2.99, coming in at a score of 8.33. So Microsoft is a pretty much a cash flow king. It's also increasing its dividends over time, and that is extremely what we want as a longer term investment. Now, we also want to consider here the valuation and the earnings that have been accelerating, and the extreme disconnect here. So the 1 year CAGR for EPS is around 28.7% here. The historical 5 year average coming in at 32 with the PE. The current PE is 25. And we simply see that the stock is fundamentally cheaper today on a growth adjusted basis. The EPS growth has nearly accelerated 1,000 basis points, yet there has been a historical multiple compression, if we analyze it due to the peer averages and the historical price of overall Microsoft. As well, we have to consider the overall shareholder returns. There has been a $12.7 billion return to shareholders through dividends and buybacks. This is as well a double-edged sword where not only Microsoft is returning value to shareholders through equity appreciation, they're also doing it through the dividends and the shares outstanding, buying back their own shares, making current shares more valuable to current shareholders. So this is well another key important point here. Now, coming to the valuation, assuming a 20% growth rate in the the earnings per share and the PEO multiple, where it should be trading around 28. We believe that the company should be valued exactly at around $596, and this is a strong buy. We are pricing in an anticipated 20%, return here on Microsoft moving forward, and this does gives us a 45% potential upside from the current trade levels, due to this, very conservative, assumptions here with terms of the valuation. Now, as well, if we look at Microsoft on this weekly chart, we are seeing that every single metric, not only the numbers, but the chart is telling us that Microsoft deserves to be trading higher. If we zoom out here, the last time we had this extreme sell-off was during the April lows here, which was probably one of the best times to buy Microsoft, where we bid up, we saw a return around 56%. And now this is occurring again here. This is why I labeled it as the best possible time to buy here on Microsoft, because we are seeing this exact same pattern again. And this anchored VWAP, where we found support, is, anchored, from the initiation of the trend back in 2023 over the long term. And, we found multiple areas of support here. And this is why Microsoft is going to be trading higher. I believe that this is going to be a very big upside potential for Microsoft. First of all, we can achieve the highs of 553, so that would be a nice increase here. The price action around 36% here on Microsoft. And we also do have to consider that our second price target on the technical side is going to be towards 670 here, and this is going to be based off of the Fibonacci retracements that we've been seeing on the trend and our custom AI algorithm that has been telling us that Microsoft has the potential to achieve those levels here. Now, we also do want to show that if we look here at the RSI, it is at its extreme low, coming in at around 28 or 29. That shows that the stock is heavily oversold, and it's just a matter of time before we see a bounce and a continued upward trend. So I'm really bullish on Microsoft. I have placed it as my number one pick out of the entire Max 7As and possibly the entire market, because I believe that it is being heavily discounted for no reason, apart from a scare that really has no fundamental behind it. So Microsoft is an extreme buy, and I reiterate my price target here on the chart towards $553 here on Microsoft. Overall, Microsoft is the undisputed orchestrator of the AI era. With the company trading at a 15% discount, the company is effectively subsidizing its future growth through unprecedented core efficiency. My verdict, like I said, is a strong buy with a massive price target increase. If you guys found this video helpful, feel free to subscribe to the channel, give this video a like, and comment your price targets on Microsoft in the comment sections below. And remember, don't let the markets whip you guys out. I'll see you guys in the next video.